Hey guys, my name's Max Convexity. Thanks for tuning into my channel. Let's look at these option positions for tomorrow for the Defiance funds. Then stick around after that and I'll make predictions for the dividend for this month. Okay, so JEPI for tomorrow, they sold 266 contracts at the 50-80 level for nearly $13. So they at least need to close at 1567. Preferably closer to 1580, right? That would make these guys, if they closed at 1580 or above, that would make these guys $339,000 on the day, which would be a nice day. 26 basis points. 11 cents earnings per share for a total. That would take the total earnings per share for the month to 11 cents. I mean, it's not great, but when you lose 25 cents a share on the first day of the month, it's kind of tough. It makes the rest of the month tough. I mean, my gosh. So just if you take that 25 cents out of there, we'd be at 36 cents. And let's see what we earned last month. We earned 46 cents. I think the day I made my prediction, we were at 37. We may have been at 43. I think I predicted on this day, and then we had one more day after that. That's what it was. Anyway, so we're a good, 30 cents behind where we were last month as far as earnings per share goes. All right, let's look over here at Triple QY. These guys sold 174 options at the 18020 level for 76.71. That makes the break even 17,943. Of course, the strike price is $18.20. That's the max profit. You subtract the price of the option, which is the price you received, but you have to subtract that to get your break even. So 76.71 minus 18.020 equals 17,943.29. All right, so these guys are going for a $1.3 million profit tomorrow. They made 1.1 today. And that wasn't even all they were going for, but they got 1.1, and that was only about 90%, or maybe more, maybe like 80%, so 85%. Nice day in any event, 7 cents a share. So that takes these guys, Triple QY, after today's performance, was up to 14 cents a share, and if they get tomorrow's profit, it'll be 22 cents a share on the month. Not bad. Once again, when you start off the month 29 cents in the hole, that was a bad loss. I think that's one of the worst losses I've put on the spreadsheet. 4.3. Well, the day we lost 4 one day and 2 the next day, that was not fun either. But that was a gigantic loss, 29 cents a share. Anyway, finished the month off all right. 22 cents earnings per share. All right, let's look at IWMY. These guys sold 654 options at the 2065 level for tomorrow at $13.18. You subtract 13.18 from 2065, you get 2051, almost 2052. So we need at least 2052. That's the magic number for break even. 2065 is the magic number for max profit. Max profit would be a 861,000. They made 754 today, 877 the day before that. These guys have been killing it lately. Unfortunately, they got started in such a hole. They lost 38 cents a share the first day of the month. I mean, that's an ass kicking. I mean, it's amazing they've rallied back like they have. They were down 72 cents a share just 6 or 7 business days ago. Then they made 800,000, 576, 877, 754, and tomorrow they're going for 861. All right, well let's look at Tress. I really like Tress. Starting to like it more. What's happening here is the option strat can't calculate. It's not the most sophisticated engine in it, calculation engine. and it can't calculate these options that expire in this cycle, the March 8 cycle, decaying faster than the options that expire in this cycle. But at the end of the day, when they mark the prices to the market, like right now, look, on today's closing prices, it wouldn't have mattered where the TLT closed. This is still going to be a profitable trade. And if it was a big outlier day, it would have been a big profitable trade. But it's a profitable trade anywhere. And that's because whenever I go like this, this shows you the valley of death based on the rate of change of the long options and the short options decaying at the same rate, because option strat isn't sophisticated enough to figure it out. The Tasty Trade engine is, but option strat isn't. But anyway, I like when we get to the end of the day and it shows a profit. It looks like it just reset. Also, what's happening sometimes is if the volatility is up from one day to the next. Say it was at 14.4 and then it goes to 15.4. A 1 point swing in volatility by the one day later, no matter what happens to the price, you made money. So this position is long vol. I don't know if you'd really call it a long volatility position, but it benefits from increasing vega. Vega's the Greek that means volatility. So we'll keep an eye on that one as well. Let's look at these single stocks, and then I know everyone wants to hear my predictions, so then we'll do the predictions. Okay, now what is going on with these single stocks? Oh, yeah. All right, so I remember now why I tried to do profit boxes before. I thought about it doing them before, and the YieldMax website to me just isn't as straightforward. And anyway, I've been remembering why I didn't do it today, because I was just trying to find out if Coinbase rolled their strike, and it took me like an inordinate amount of time. And then I still wasn't sure if I was right, if my assessment was right. But anyways, so then I had to go listen to Corey's video. If you don't listen to Corey, you need to. Her name of her channel is Happy Camper with Dividends. I've mentioned her before. She has 180 subscribers, but a week ago she had 10. So she's incredible, and she is the expert at this. At which strike is open, which strike is closed, where the synthetic is. So's Retire on Dividends, but I go to those guys because they just know a lot more about YieldMax. I went and I couldn't really. Sometimes I can't tell if it's the synthetic or it's the one they're actually short. But anyway, go to her channel. She has all that straightened out. Her spreadsheets are beautiful. But what I suspected was right. I was pretty sure they did not roll it yet, but I had to watch her video to make sure, and that she concurred. Coney still has just one strike, and so does Tesla. They've only sold one strike, but the one that hadn't was Nvidia. Is laddering strikes all over the place. They have some at the 810, the 815, the 825. And the 835 and the 835. In fact, I couldn't even really get them all drawn on there because I didn't want their lines to overlap. But basically, you can see they have a lot of profit. If we want this price to go somewhere in the middle of all these, and that would be a good average outcome. So that looks good. But as far as Tesla, they have the same strike, the 200, and that's actually doing all right. And Coney, I'm sorry, I always say Coney and then type in Coney. Of course, you got to type in Coinbase for Coney. And then Coney. Okay, so I don't know what's if this is my position, you're leaving money on the table. I would roll this, but I don't know. I guess you could also use the prayer method and just pray that the price comes down before expiration. I mean, I guess that's a strategy too, but I don't know, even with just a few days left, why you don't cover these and roll. But they know more than I do. I mean, even if I had to roll into the next week, into the following week, but I don't know. I'm not looking at their data. I am definitely not looking at their data. So let's check out the buffer report real quick. I'm really impressed with how the buffer report is looking. And it does all this automatically. I've got it. It took me a long time to do it, but I've got it where I just have to come here to the charts. There's one or two things that's not working. For some reason, I'm not getting, oh, there it is. I do have it. I thought MSTR wasn't showing up, the parent asset for MSTY, but it is. Boy, MSTY had a hell of a day. Really, so did Sky. Look at Sky. This is just on a one day they outperformed. MRY outperformed on a one day. JEPY looking really good today, so was iSpy. All right, let's get on to what you guys want to talk about. Okay, let's make these predictions. All right, so let's look at a few things first. Let's discuss how the month went. Well, for one thing I never emphasize capture percentage anymore. But I just averaged it up. The top line is the average for this month, and the bottom line is the average for all time since I've been following this. So for 2 months. Or I've been on these spreadsheets for 2 months. I had some other spreadsheets before that were really bad. These aren't great, but they were much worse. I had no idea what I was doing. I still don't, but but anyway, I really didn't then. So, since I've been since I've been on these spreadsheets, their average has been 7 cents. And Jay said that he wanted to average 25 cents. So even though Jeppy's done all right, the past 2 months have been a disappointment. Back in November, December, I forget because I don't even want to look at those spreadsheets, but they were averaging 20, 25, 30 basis point capture. They were getting more capture. It was the perfect conditions, or it was close to the perfect conditions for cover call funds back in January and December. Or I'm sorry, back in November and December, for sure. And so I could also break that down to dollars. They're averaging a $40,000 a day profit. But if you include last month's also, they average more like 84. So even compared to last month, they aren't doing as well. Of course, you can see that in the bottom line. The earnings per share is the bottom line. We'll just look at the bottom line and just assume they win tomorrow. It's half a dozen of one or 6 of another. We'll just look at them all as though they win tomorrow. And that way we'll be comparing apples to apples. I'm not predicting that they win tomorrow, but just so we have a way to look at them. But in looking at the same number last month, we were at 43 cents a share the day I made the prediction. And I think I predicted like 50 cents or something for their dividend, right? Is that right? I predicted something. Well, no, that's what they got. Well, they got 58. I don't know. I know that my predictions were low, especially on IWMY. I predicted 70 cents, and they ended up getting $1.20. So I think last time I just predicted 45 cents. Actually, I think I just predicted whatever this number was last time. Anyway, so this time they've had a lot more. They've struggled a lot more. If you look at the earnings per share, starting off 25 cents in the hole wasn't great. But even after they worked their way out of the hole, then they go right back into it the middle of the month. And they finished pretty strong here, but we're still just at 11 cents a share. So, if they do pay out the same dividend as they did last month, and I don't mean the same payment, I mean the same style, if they just pay out all of the extrinsic, we've got 60 cents a share extrinsic, and that's including tomorrow's. Well, we're going to get tomorrow's extrinsic, I guess. We may not get tomorrow's profit. Tomorrow's capture doesn't have to be 26, but tomorrow's extrinsic will be whatever it is, 291. So, using the extrinsic only method, you're talking 54 cents. Now, this is for JEPY, and this doesn't factor in the interest they get off the T-bills and the short-term debt instruments. So, here's what I'm going to say. My prediction for this is, I'm going to say 60 cents. And let me see what they paid last month. And I don't think they're going to pay more than last month, though. All right, I'm going to say, I'm just going to go with the estimate. It's 54 cents. I'm going to add 3 cents for interest income. I mean, I think they get 4% on those, but they only have 80% of the fund in it. So, you know, 3%. So I'll just, to make it even, I'm going to go 55 cents for the dividend prediction for JEPY. All right. Now, if they do pay that, though, because last month they paid 58 cents and they caused about 14 cents worth of NAV, you know, of a discrepancy in the NAV, let's just call it. So now some months in December, November, December, they made a little extra money. Some months are going to lose a little extra money. But so, you know, it's a big difference. If they pay the same thing again this month, they're going to cost, it's going to be more damaging to the NAV. But I don't know if they really care, because I think they have a back test. I know I've told you this a million times, that says they can pay out, you know, a certain percentage every month and still be fine. And they don't seem to be too worried about it. So we'll see, though. We'll see. I'm not trying. I don't want to predict the dividend. I'm not saying I know. Like, for instance, on TRES, I'm not even going to make a prediction. I've heard other people. My subscriber Tom says he thinks they're going to pay whatever the whatever government bonds pay, whatever. So what is it? It's a TLT. It's 20-year Treasury. He thinks they're just going to pay a dividend that roughly equates with whatever that pays, whatever that's paid now. He thinks they'll give that as a dividend. And that's a great theory, and I almost thought about breaking that down and giving it as my prediction, but I realized it wouldn't be my prediction. It would be Tom's prediction. But I think that's pretty safe to assume that it'll pay about the same amount of money, but I have no idea. I'm not trying to say I know it all. I don't, but I'm trying to learn it all. So after I see how TRES pays this month, and then maybe the following month, I'm going to try to reverse engineer how they're doing it, and then predict it. Jackson, knock it off. Jackson, knock it off. So I'm going to try to reverse engineer it, but this month I have no earthly idea. But so let's go with 55 cents for JEPY. Let's go on triple QY. Let's go here. Jackson, knock it off, buddy, please. Knock it off. All right, so these guys made 22 cents a share. Like I say, I'm not even sure this matters, really. This time last month, they were at 46 cents when I predicted the dividend. Then they ended up losing on the last day, so 39 cents. So when they paid out last month, they caused about a 50. Jackson, knock it off. Jackson. They caused about a 50-cent problem with their NAV. Now I don't know if they pay the same thing again this month. It's going to even be a bigger problem. Like I say, I'm not really sure they're worried about that. So I'm going to say that they pay. Jackson, knock it off. I'm going to say that they pay 80 cents a share, and I'm going to add 3 cents for the interest. So we'll go 83 cents. So they paid 85 last time. So far I have 55 for JEPY and 83 for QQQY. All right. Now let's go over here to IWMY. Well, on the last one, we forgot to look at the averages. I just wanted to show the average month here is actually not that much worse. They're averaging 7 cents a share captured this month, and they captured 7%, 7 basis points. And last month they averaged 8 basis points. They made 184 a day this month, but they made 224 a day last month. Not that much worse. You know, 22 cents to 46 cents, right? I guess it's about half. So it's half on an earnings per share basis, but this isn't half. But this is a little different way of looking at it. Okay, let me think about this one. Let's look into this one real quick. Oh yeah, never mind. Let's look at IWMY real quick. Okay, so last month these guys paid $129. Now this time I have them lower. I have that they haven't done as well as last time. Let's look at the averages first of all. They're underwater 10 cents earnings per share. Last time they were underwater 37 cents. Heck, they were underwater 37 cents. They just paid out their extrinsic. Now they're underwater 10 cents. They'll just pay out the extrinsic again, right? I'm going to say 108, and I'm going to add 3 cents for interest income. So I'll say 111. I'm going to make it 110 to be an even number. So I got 55 cents for JEPI, 110 for IWMY, and I already forgot on QQQY. It was, what was it, 85 cents? And I rounded this one up to be an even number, to be, well, wait. 80, no, I said 83 on this one, didn't I? I think if they're going to pay 83, they'll just pay 85 to make it like last month. So I'm going 55, 85, and $1.10. How does that sound, everybody? What do you guys think? I mean, it hasn't been a great month earnings-wise, but it's been a decent month extrinsic-wise. Maybe it's like anything else. Maybe after this month, we'll notice something else and we'll reverse engineer it a little better. Or maybe they'll just pay out exactly the extrinsic again, like they pretty much done the past couple of times. We'll just have to kind of take a wait-and-see attitude. It should be fun in any event. I think I'm going to re-record this as a standalone earnings show and release it without Jackson barking. But I appreciate you guys for listening. You guys got an early preview of the earnings show. I'll stick with those numbers. So I'll stick with what I told you guys. So 110, 55, and 85. Those are the numbers. So let me know. Does that make you guys happy, upset? I'm guessing most people would be pretty happy with that. And I do want to say that, you know, these people that say they're just giving us back our own money and they're paying out of future earnings is BS and they're going to go to zero and stuff. I mean, of course, I don't think any of that, but I do agree. Just to be fair, yes, it is a little concerning if they're going to keep paying these insane amounts, even on months they lose. I mean, I get that argument of it. I get that it's going to, the no free money part of the argument means, yeah, I guess they could do that, but they are just going to, knock the dog shit out of the NAV. So, I mean, I'm not saying I'm all for that and, that I'm totally cool with that. I'm just saying, evidently they are, it seems like. But, if it was my fund, if I was the one doing this, of course, I have different needs than most people. But on months I didn't make a profit, I just wouldn't pay a dividend. I would make the dividend the earnings per share. I mean, I think that would be fair too. Now, of course, these funds would pay a lot less if they just paid out earnings per share. But I wouldn't do negative. But the thing was, in a bad month, you just wouldn't get anything. In a good month, or maybe in a bad month, you would get some. Maybe in a bad month, you would get. I would make some formula, but I agree. I think they could be more conservative. Maybe in a bad month, you get a third of the extrinsic. So they'd pay these guys 30 cents. They'd pay the other guys 20 cents or something, 15 or 20 cents. You have some money coming in. Then in a good month, and then maybe in a winning month, you just go ahead and give them the extrinsic. I think that'd be fair, but it has to be they have to make they have to have a positive month. They can't just be bleeding red ink everywhere. I mean, I get that. I mean, if it was, I might do it different. I'm not saying that I'm not open to the idea that they can't be doing something unwise to try to make extra money. And I'm going to damn sure keep my eye out. I don't get the idea. I get the idea they're pretty transparent and straightforward and stuff, but I'll definitely keep an open mind to the fact that they could do something like that, either intentionally or unintentionally even. And so, maybe these aren't as good of the investments as I think they are. But one thing I would say is even if you don't like these, I get that some people, I get it, even if you don't like these, for God's sake, go buy JEPI or JEPQ or XYLG, which is the half dividend one for Global X, where they only sell half the cover calls they could. They pay about 6 instead of 12. But Yeah, those shouldn't have any of the problems like these really high yielding ones do have. These high yielding ones do have, not really a problem. I like them, but they do have features that make them different. But I just don't get I don't get not liking covered calls at all. I'm just think, there's a covered call fund out there for everybody. Everybody doesn't have to be in triple QI, or it seems like everybody is in FEPI, and FEPI is a damn good fund. All I'm saying is I don't think these are going to zero. I don't think it's a Ponzi scheme, et cetera, et cetera. But that doesn't mean that these have to be the best investment ever. The two things can be true. They can not be a Ponzi scheme and also not be a great investment. And I'm open to that. I'm open to that. Like I say, that's not what I think, but I'm definitely open to that. All right, guys. Well, thank you for listening to me. I appreciate it. And you guys got an early preview of the earnings show because now I'm going to go record it again since Jackson barked all the way through it. All right, guys. You have a great evening.